What's up, guys? Welcome back to DCA. So what we're going to do in this video is take a look at the altcoin market. Now, we're going to look at this from the perspective of this market cycle in terms of the drawdown that we've seen ever since this all-time high in November. And we're going to compare that to the drawdown that we saw back in the 2018 cycle. So we're going to look and see what is similar in this drawdown, in this bear market that we've seen, and what's different, because maybe that can give us an idea of what we may expect going forward. And the reason that I want to do this video is because when I was talking about the altcoins in the past, I've always warned people that you need to be careful when we're heading into a bear market. What we've seen is that when the market enters into a bearish phase of the market, we see that the larger cap coins, so in this case, Bitcoin and Ethereum, are typically going to outperform. Now, in the last cycle, Ethereum, in fact, did not outperform and it did quite poorly. But I think it reached that point now where people have more confidence in Ethereum, and therefore it, as its market cap has got larger and larger, it sort of entered into that territory now where we've seen that those coins, namely Bitcoin and Ethereum, are going to hold up better than a lot of your other altcoins. In this analysis we're doing, we're actually going to exclude Ethereum. So we're only looking at the top 125 altcoins, excluding Bitcoin, excluding Ethereum, and excluding the stable coins. And so we're going to try and understand, what is this drawdown that we've seen in this market cycle? What has it been like? And how does it relate to the prior cycle? Okay, so let's take a look at how this cycle's played out and then compare it to the last cycle and kind of look at what happened after the last cycle was at the point where we're at right now. So first things first, let's look at how long this drawdown has been going on for. So we kind of reached this peak right around here on November 10th. And ever since that day, it has been around 253 days. What I have here down below is just a script which will show us from any day that we want exactly how far has the drawdown been. So we can see that right now at this point, the altcoin market is down around 74%. Okay. So some of the assets are down less, some are down more. All right. But on average, they're down around 73 or 74%. So that is a fairly severe correction that we've seen so far. When you look at this, I think a lot of people thought that this correction back here in May was quite bad. But, if we compare that to what we've seen so far, that's really nothing. So if we just go down to the bottom right here on July 20th, we were down around 60% there. So being down 10%, that difference is quite large. And if you do the math out, you'll see that it's more than just being down 10%, because it really starts to take on an exponential component because of the number of doublings that you have to do to get back to your all-time high or to wherever your cost basis was. So, as a quick example, if you have $100 and you then lose 80%, so you're down to $20, right? So how many multiples of where you're at do you have to do to get back to 100, to get back to your cost basis? Essentially, you're going to have to 5x. You'll have to 5x from this point in order just to get back to where you were. So that sounds bad. Now imagine though you go down 90%. Okay, now you have to 10x to get back to your cost basis. So that 10%, when you're talking about wherever you're coming from, it sounds like 10%, but realistically, you have to do twice as well in the market just because of that 10%. So as you start to get lower and lower and lower, the odds against you ever getting back to your cost basis significantly start to stack up against you. And so that's why we always talk about this fact that, just because we are down 70% or 60% or 80%, wherever it is, you really have to consider where you're throwing your money at. And, you have to consider what is potentially up against you in the market. Because if this were to drag on for some time, we saw a lot of the altcoins down 90%, 95%, 97%. That was very common. Even a lot of the top altcoins were down in that type of range in the last cycle. So, right now we're down 70, about 75%. More or less, we're down 75%. And at our worst, we were down around 80, 81% during this cycle. So, with that said, let's go compare this then to the last cycle. And I think it's quite interesting, actually. So, this is the 2018 cycle in red, and as it gets worse, it heads into blue. And then we have this compared to the 2022 cycle. So that is in green. And as the cycle gets worse, we get into yellow. So it's a gradient color for these two. What you can see is that, essentially between the beginning of the cycle to about the first half of the cycle. So I should also mention, we're only looking at here, we're looking at the same number of days. So we're looking at that 2018 bear market, and we can just bring it out here so you can see. We're looking at this 2018 bear market, but only the first 253 days. And what you can see, this is interesting here. These two bear markets have essentially been in lockstep with one another. So for about the first half of this bear market, we were doing better than we were in the last bear market. The last bear market was quite severe right in the beginning. So there was that huge correction. Bitcoin topped out in December, and then the altcoins went on their run. And then, we just saw that this altcoin market just absolutely crashed during that time. So it went down around 80% almost instantly. And in this cycle, we didn't really see that. We sort of went on this prolonged downtrend. So we went from a place where the altcoin market was down around 30%. It was only down 30%. It's not terrible, certainly. Because if you look at the 2018 cycle, they were down around 60% at that time. So they did get that recovery, as these bear markets typically do. But then since that time, we've had this just a huge crash. And ever since then, these two cycles have been just moving in tandem with one another. So around the last 60 days of the cycle, or the last 2 months really, we have been essentially exactly at the level that we were at in the last bear market. So, coming from around 65% down to around 80% down. And then, we've got this rally, which has put us ahead of where we were in the last cycle. But this is what I find to be interesting, because you see that we've had this rally right here where, we've recovered from down around 80%, getting up to around 70%. Well, what if we just look at this last cycle, right? So this is the point right here. I have it marked in gray. So all we're looking at is the last cycle now, and we're excluding this cycle. And what's interesting is this is where we're at right now. And if you note, we're on this rally at the moment where we've gained around 10%. Look at what happened last cycle at the exact same time, right? Almost to the day, where we're seeing our rally. The last cycle went on a rally right here from, the total crypto market cap of the altcoins went from around 50 billion all the way up to a peak of around 80 billion, right? And if we measure how much they gained during that move, it was a 60% move. So it was not a small recovery, right? And then they kind of consolidated right in this 40% range. And what happened from there? So we're talking, September into October, and I think we all know what's coming. And this is why I want to show this today, because I think this is important to understand from our perspective where we're at now, because we know we're almost exactly in tandem with this cycle. And this doesn't mean that, I'm not sitting here implying that we necessarily need to crash like we did in this last cycle. But it just goes to show you there are a lot of similarities between these two market cycles. And this is nothing new, guys. We've been, talking about sort of the way that these cycles play out and how there's a lot of consistency from cycle to cycle. And I think that this is important to recognize this fact. So the market crashed another 60%, right, from this point. Now, like I said, when we look at the absolute level from the all-time high, we went from our all-time high being down 77% to being down 91%. So it only sounds like less than 15%. But when you look at the actual move, it's a 60% downside move. So there's a massive potential for additional downside loss, is what I'm getting at. And don't get in your mind that 80% down and 90% down are not that big of a difference, because you have to remember, when you're talking about from your all-time high, yeah, maybe it's not that big of a difference, but you don't care about what the all-time high was right now because we're not at the all-time high. All that matters is where we are right now. So it's just something to keep in mind, guys, because, and we could just quickly look at an example here just to give you a better idea from an individual asset perspective rather than, looking at kind of the whole market cap combined. So let's just take a look at Ethereum and see what it did back in 2018. So Ethereum, and we'll kind of go to about where we're at now. When we look at the drawdown from its all-time high until, we said that we're somewhere in September, that was an 84% drawdown. So that seems like, wow, that's an amazing time to get in, right? But if we look from this point here, what if you bought right here? How much would you have been down at its worst points then from there? And there was another 63% drawdown. So you still had all of that downside potential that could hit the altcoin market. The amount, even if you did buy here, you were kind of sitting on a loss more or less until we officially got above that level and stayed above that level. You had about a year and a half or, a year and 2/3. And so that's a long time to be sitting on a loss. But, that's kind of something that you're accepting when you get into the crypto market, is that if you are a long-term investor, it's very likely that you're not going to be able to time the bottom. And unfortunately, the difference between not timing the bottom and timing the bottom can be massive, even between just a few days, because we have such volatility in this market. So you kind of have to accept the fact that a very good investment in this asset class can unfortunately have you down 80%, 90% or more for an extended period of time, because it's just that volatile. But at the same time, that's kind of why I'm always suggesting to take a dynamic dollar cost averaging approach. If you're going to get in right here, take that position, but don't go all in there. Don't ever go all in on an altcoin in a bear market. That's insane. That's my point, guys, is that, it may look like the market has retracted a lot from here, but all we have to do is compare this cycle. We're even right now. We are even, and this line is showing where we're at right now in terms of our drawdown, and that's right at that 70%. But you see that we were even, but then this market, this 2018 market, it did still have a huge correction. Now, one other interesting way that we can look at this, and we'll just wrap up with this, is how far, when we did get below, how far did we kind of stay below? And, you can kind of see that we were getting essentially rejected off of this line over and over again. So it was about that, 2 years or so until we got back above around 664 days. So there were time periods when we were able to get above that level, but it was very short. So you can see that these big corrections, they can still come in the market even when the market is down 60%, 70%, 80%. There can still be large additional corrections. And that's exactly what we saw in the last cycle. Okay. So just to kind of let you know exactly what happened, it went from 75% all the way down to the entire market, mind you. This isn't individual coins. This is the entire altcoin market was down 90%. So It's just something to keep in mind, guys. Now, also keep in mind, if you were buying at these levels, when they do have these big corrections, this is why you don't want to go all in, but it's not a bad idea to take positions. Because if you're down 70%, yeah, you're going to be burned and very likely burned for quite some time. But if you take a position here, you take a position here when you're down 80%, maybe you take another one when you're down 90%, and you kind of scale them up as you're moving along. We've seen that over and over again, the market then rapidly recovers. And when it recovers, trust me, you don't want to be the guy FOMOing in as it's moving down. You absolutely don't want to be the guy FOMOing in when it's up here at the top, because this is the type of investor we try to avoid being at all costs, right? The guy who's buying into bull markets. There's no money to be made up here. There's very little money to be made in this range, especially for the amount of risk you're taking. But there is absolutely massive amounts of money to be made in this range, right? So you may be down temporarily and you may be down a lot, but this is where the money is made in the market. This is where noobs come into the market. So, where are we at now? Well, I think that quite frankly, I think that we're kind of exactly what I just showed you. I think we're probably ultimately we're in a situation very similar to the last cycle where we've corrected a lot, but I think there's going to still be downside potential left in this market. And remember that downside potential, it may sound like 10, 15%, but really it's 50 or 60%. That's going to be it for this one, guys. I hope that this advice makes sense to some people. And I hope, I know it's a little bit conflicting, the advice, in that, you don't want to necessarily think that we're at the bottom right now just because we're down 70%. So I am telling you, don't FOMO in. But at the same time, if you have a long enough time horizon, and if you can look at the market and say that I can stomach an additional 50 or 60 or 70% move to the downside, if you can stomach that, then this is very likely a excellent time to be buying particular assets. And I'm not going to say everything, because a lot of the marginal projects will probably be gone by the next cycle. But if you are looking at projects that have adoption, they have strong fundamentals, they have users, I think that those projects, eventually, when this market recovers, when we get past all of these economic woes that we're facing right now, I think that this market is going to be back on a path like this, and you will be fortunate to have got into these assets down at these prices. So that's going to be it for this one, guys. Until next time, as usual, see you.